Good evening and welcome to our market coverage. Let's start with the key numbers from Friday's close. The Nasdaq finished at 26,166.60, down 1.32%. The S&P 500 slipped 0.37% to 7,472.79. The Dow Jones managed a modest gain of 0.29% to 51,712.71. The VIX Volatility Index rose 2.98% to 17.28, signaling some nervousness creeping back into the market. The 10-year Treasury yield climbed to 4.51%, up 1.3% in the last 24 hours. The dollar index edged up to 101.00, while the offshore yuan held steady near 6.7774. Bitcoin traded flat at just under $64,000. Now here is the big story today. Global markets saw a clear structural divergence. Chinese A-shares staged a powerful independent rally, with the Chi-Next index surging 2.52% to become the strongest major index worldwide. The driving force was the National Integrated Circuit Fund Phase 3, which came in much larger than expected at 344 billion yuan. This fund is targeting advanced manufacturing and AI chips, and it lit a fire under the semiconductor and domestic substitution sectors. The CSI 300 gained 2.39%. Chinese domestic capital completely drove the session, shrugging off the weakness we saw in U.S. stocks on Friday. But the picture overseas was very different. The Fed's semi-annual financial stability report flagged AI as a systemic risk. On top of that, the U.S. launched a Section 301 investigation into Chinese mature node chips and tightened export controls on lithography equipment. European political uncertainty is also weighing on sentiment. As a result, risk appetite is clearly shrinking. Money is flowing into defensive assets like treasuries and the dollar. The VIX is up, the 10-year yield is rising, and growth stocks are under pressure. The weakest link today was crude oil. WTI fell 4.29% in 24 hours, driven by demand concerns and a broader shift away from risk assets. So we have a clear pattern. During the Asian session, Chinese equities surged on policy news. But Europe failed to catch the bid. Major European indices stayed weak as political risks in France and Germany continued to simmer. And U.S. pre-market futures are pointing lower, with the Nasdaq down 0.2% and the S&P down 0.16%. The Dow futures are actually up 0.51%, but that looks more like defensive rotation into traditional sectors. The key inflection point today is the divergence between China's policy-driven strength and the macro risks hitting the US and Europe. Can this divergence last? The semiconductor theme in A-shares is well established for today, but we need at least 2 days to confirm a sustained trend. If the sector holds up tomorrow, the narrative gets stronger. The defensive rotation in US markets, by contrast, has been building since last week and has higher continuity. The risk for tomorrow is clear. If US stocks sell off again tonight, A-shares could face pressure at the open, especially the blue chips that foreign investors hold heavily. Let me give you our specific forecasts for tomorrow. For the Shanghai Composite, we expect a range-bound session between 4130 and 4210. The tug-of-war is between the positive catalyst from the big fund and the negative overhang from trade tensions. For Nasdaq futures, we see continued weakness during the Asian session tomorrow, with a decline of 0.5 to 1%. The 10-year yield may pull back slightly to between 4.45 and 4.5% after its recent run-up. And the offshore yuan should stay in a tight range between 6.76 and 6.79, supported by China's policy buffer. Let me wrap up with the bottom line. Global markets are deeply divided. Chinese semiconductor and domestic substitution stocks are the clear winners, driven by strong policy support. But outside China, risk appetite is fading. U.S. tech stocks are under pressure from regulatory and macro headwinds. Our strategy is to stay constructive on the A-share semiconductor theme but hedge U.S. equity exposure. Watch the US market close tonight, watch the VIX, and watch northbound capital flows tomorrow morning. If the Shanghai Composite pulls back to 4,150 or below with no drop in volume, consider adding to semiconductor ETFs. But if US futures open down more than 1% and northbound outflows exceed 3 billion yuan, stay on the sidelines. Trade carefully.